Friends, how are you? This is Igor Pechkovskyi, your trusted real estate advisor on the East Side and Seattle metro area. In today's video, I want to talk to you about supply of housing. We speak a lot of different things. We talked about demand. Check out our video on commercial real estate update of how many companies and how many businesses are moving in from all over the United States. And we talked about market updates, as you could see other videos. The last one I recorded, the shift in market, new interest rates, the East Side peaking at 1.7 million, and who knows, maybe we'll go down from there. But today, I want to talk about supply of housing, just supply, why it had been short, and why I don't think that anytime soon we're going to have more of the supply, and why I think actually the market will keep on being strong. There are a lot of nightmare videos out there, why it's all is going to hell right now and going to crash. I personally don't really think so, and what do I know? But I want to show in today's video a few slides for you and something to think about. So stay tuned, we'll have a great video. Let's go. But before I get started, I would love to ask you to like this video and subscribe to our channel. We spend a lot of energy trying to bring those reports for you together, and would love just to see what you're thinking about these videos. Make a comment, suggestions, any topics that you'd like us to discuss in future videos. We'd love to hear from you. All right. Let's go. So 2 weeks ago, I went to Chattanooga, Tennessee to look for some investment real estate, and I went to a real estate conference in Chattanooga. Me and my wife, we keep buying properties around the United States and look at different markets. Tennessee seems like a great market. And I stole the presentation that I'm about to show you and some slides from a very good friend of mine. You can see his name, Cody Touchette, branch manager of Caliber Home Loans. So plug to Cody. I met Cody at another real estate conference like 7 years ago, and we've been good friends over this time. Not a big fan of this picture of his, so here's another picture of Cody, sharp looking with the phone. So let's get going with that. So the timeline of real estate, quick reminder, 2000 all the way to 2006, market been amazing, right? Then 2000, end of 2007, everything crashed. What people forget, and they always remind me like, oh, market crashed. Back in the day, real estate was the reason of the crash. Like all the fraud loans, everything that was going on was the reason. Real estate was the reason why the market crashed, right? Today is not the case of everything that we have going on. But 2008, market is, lots of properties in foreclosure, good opportunities. We've been the bottom. 2010, it seems like right about mid-2011, it felt like the market stopped falling and went up from there. So right around 2018, the market leveled to pre-recession height, right? So actually people were able to sell properties again, and they were not underwater. And from 2018, market just charged ahead, and we set all the records we possibly could set when it comes to selling prices. So before we get to supply, another slide of our dynamic market. As you can see on this graph, the gray lines, those are recessions. So 2008, market came down, and over the last 45 years, the annual price growth was average right around 5%. And in 2020, we had another COVID recession, right? Because that was a recession, even that we recovered pretty quick because we just been printing so much money that went and boosted the markets with inflation and super low interest rates. So the market skyrocketed. But one of the reasons why we have so little inventory and so little supply of homes, just because we pretty much stopped building them. Check this out. Number of homes built in the United States between 1900 and 2019 in millions, right? So over decades of 1990, let's just get all the way to 1990 and 2000 and 2000 and 2009, we were building right around 27 million homes in that decade on average. 26, yes, right around 27. Right after the crash, so we were going so good, building. Real estate market had crashed 2008, and in the last decade, we built only 5.8 million homes in the last decade. That's nearly almost what, 1/6 of all the volume that we had done before. So builders just went out of the business. All the real estate, construction businesses, a lot of foreclosures, builders went out of the business, and the industry hadn't recovered to build new homes after the last recession. We're not even close to the volume of homes that we were building before. And this is one of the biggest reasons that we didn't have housing supply. If you look at the next graph, at the same time, increasing numbers of households in the United States didn't really decline much at all. So in 2000, we had a really very small decline, but we just kept on going all the way through 2010 to 2020. The demand and increase in number of United States households just stood strong. So I know, my friends, that this is not a rocket science. I agree with you, but I always have to keep reminding you those things, right? People like, oh, Igor, you're just optimist. You just need to sell us real estate. Well, believe me, I couldn't care less about you buying real estate or not buying real estate. But at the same time, I'm just here to show you, like, look, we didn't build enough, and there are a lot of demand for housing. Right? We built in the last decade pretty much no housing at all. And look what demand does. That's one of the reasons, just mathematically, why the market was the way it was. But let's look next. So now, where are we gonna go from here? Interest rates at 6%. Look at this. So beginning of this year, in January, interest rate was 3.22, and in April, 5.11. Now high balance conventionals even closer to 6%. So the buying power being reduced. So for the payment of $3,500 a month, and you could afford with that interest rate $800,000. And today, if you want to have the same payment with the new interest rate, it's pretty much $650, which is a huge reducement in buying power, especially for first-time home buyers. But the real question, if you say, well, would the market crash? That's what people ask me all the time. That's why if you Google, right now, real estate is about to crash. I've seen those videos for the last 10 years. They're all the same. But let's think about it. Let's see what happens. So here's a few more things to think about, right? When it comes to market crashing. Look at this. So we just talked about the supply. We hadn't built enough in the last 10 years, not even close. Demand, second one, kept strong. Right? There are a lot more US households created in the last 10 decades. So we do have strong demand, not enough supply. Comparing to 2008, as I mentioned already, the reason the system crashed because it was fragile in system. You could be making $10 an hour and buy $1 million place. Good luck with that today. If you bought a home recently, you know what I'm talking about. Like, especially me, self-employed, I'm not W-2. I had to show them whole life of mine, especially in business, all the taxes for the last 3 years and everything to make sure that I qualify. So credit quality is astonishing right now. I believe the average credit score of a borrower is like 780 or something today. So it's a very, very, very different situation. So those guys are obvious, you know about this. But the following three actually are the ones that made me think about this video, to record this video. So 2 years of record low rates, locked in owners. Think about that. If you own the property in the last 3 years, there is a very high chance that you refinance to lock that interest rate. So mortgage business been on fire just for the fact that rates went all the way down to 2.5%. A lot of people refinance, if not all of them. So now there are a lot of homeowners that have those incredibly low interest rates. Why would they sell? Why would they increase the supply of homes and put their houses on market? Because they have to move somewhere, right? So if you look at this, also great article by Fortune. I'm gonna leave you a link in the description of this email. Homeowners don't want to live. And the article goes, we're in a housing market where nobody wants to sell and it could get worse from here. And I completely agree. So they have interest rate at 3%. If they sell their house, they have to buy a house at 5-6% new interest rate today. Makes almost no sense. And the article talks about the gains they had and other challenges. They rather I advise my clients just to rent their houses. Think about it, like why would you get rid of that incredibly low interest rate, which I do not believe will come back. Even when rates would drop, they probably not gonna go back to 3%. They'd probably be at 4.5% top. So, but that one of the reasons why I do not believe those houses will be coming on the market anytime soon and not gonna increase supply. So those reasons are pretty obvious, but the next one could be a new thing to you. Now you have a new competitor for buying houses, and this is Wall Street and hedge funds, right? So there are a lot of global money are in real estate today. If it's a new thing for you, just Google hedge funds buying houses or put it in YouTube, Wall Street buying houses, and you'll see how big the market is. The Wall Street is in buying single family homes for rent. They're gonna sit on those homes for the next 10 years. And here's my top articles for you that are also in the description of this video. By New York Times Magazine, a 60 billion housing grab by Wall Street. Go check that one out. You have CNBC News, who's outbidding you by tens of thousands of dollars for that home of your dreams? A hedge fund. And one of my favorite, modeling an asset class. It is an asset class, guys. It's not just a home, it's an asset class. Why Wall Street might be in the single family rental market for keeps. The bottom line is those homes they buy, you're not gonna see those homes on the market for the next 10 years. They go into be out of the buying pool for a long time. Think about it, like when property goes rental, this is it. Minus one home for a while for you to buy for the next 10 years. Very little supply from builders, and you have increased demand over the last 10 years. Demand didn't slow down at all. So that's another big reason that is out there that's worth to think about why supply had been so short and probably will be so short. And one of the last reasons, supply chain issues, as you could see back on this slide, for materials. It's really tough to be a builder today. It's really expensive. You have increased cost of land, you have increased cost of labor, materials, zoning regulations, permitting, everything that the city requires you to do. And it just takes 1 year, to get your appliances, takes your 8 months to get your windows in. It's a nightmare to be building today. For that reason alone, and we hadn't built that much houses in the last decade, and I don't think that we are going to build any really much more in the next decade. So you just have to think about those things, especially if you are here in Seattle or Bellevue. There is no land. Think about it. I always continue to say this. There are lakes and mountains, everything that makes this state beautiful. But when you think like, oh my God, how the housing could be so expensive, there is no place to build. None. Zero. And nobody wants to sell. And that's why we have what we have. I'm gonna wrap up this video with this. I know that nobody knows what will happen. We have a lot of global events where we haven't been. The stock markets are down. In last year, people would pull the money from the stock market and leverage it against, 3% interest rate and buy a house, right? Today, things are changing. We'll see, we'll navigate it. But I do believe that housing will continue being a hedge against inflation. It's not 2008. The housing is not a reason for the crash. Even if we will have a recession, I just still believe, that people not really going to be selling their houses. Like, I have my house in Bellevue. I got to stay somewhere. I have to live somewhere, right? I qualify for that house. I can afford that house. People who refinance their houses, they have increasingly low interest rates, like affordable payments. They bought those homes a while back. They're going to hold on to these houses. So for that reason, I don't really personally believe the market will crash around here. Like, all the data and numbers show me that it's one, but we'll see. So when people ask me, should I still buy this home? Here's my answer. Inflation is high. It is high. Like, equity in real estate or whatever you want to hold your equity is probably still better than in your bank. Rates will likely cycle. Check out my previous videos on rates, like just last couple of videos on rates. I always, if history repeats itself, and it will be the same thing again in the next year and a half, we'll see rates go down back to 4.5%. rents will increase over time. So high interest rates take the pool of first-time home buyers out of the market, right? They will continue to rent. Rent's going to increase. So if you don't sell your house, rent your house. There is the demand for rentals, as it's a crazy demand for rentals. If you own the house, you still can get depreciation. You can still get appreciation. Probably prices will keep appreciating. That's my guess. Not at 30% a year, definitely, but at 4, 5, 6%. That's my best guess. And with rates increasing, housing affordability is not as good as more people will be renting. Yes, that's absolutely true. Friends, I know this is a lot to take in, but I already summarized that. Those are the reasons why I think that supply will remain short. I do believe that demand will, it will decrease, but it will stay high. Yeah, I hope it was of value to you. Please like, share, subscribe to this channel. Let me know what other topics do you want me to cover and discuss, and see you at the next one. This was Igor Pechkovskyi with Windermere Bellevue Comments. Bye-bye.